Now we are covering the economy. It was a wild ride on Wall Street today. 24 hours after the Dow took its biggest dive in 3 years, all eyes were on that big board. The Dow swung more than 400 points, fortunately finishing up 61. Unemployment numbers coming in slightly better than expected. Eyewitness News reporter Nicole Estefan joins us now with more on what this means for your wallet.
Well, good evening, Susan. History has shown with a great deal of volatility on Wall Street, rough times usually follow. We found out today that the future is uncertain, and the best thing may be just to ride the wave. A plunge not seen in 3 years, a rally, a roller coaster ride on Wall Street without the same kind of thrill.
If the news is good on Monday, you'll see the market go up. If the news is bad, expect it to keep going down.
The news right now is not good. The European debt crisis combined with the U.S. debt crisis has sent these boards into a spin. Investors scrambling to protect their money, but we found out it's not the time to make any big decisions.
When you're in the midst of the foxhole, it's not a great time to be deciding whether you want to be in the war or not.
Oliver Tutt, a financial advisor, says a long-term plan is the best route.
You have a long-term philosophy, you're going to be fine. If you don't have a good plan, if you're not using good solid fundamental principles, you should be prepared to have your head handed to you.
Though the market is a leading indicator, no one knows for sure whether the board will rise or fall. One thing is certain.
But I think it's fairly likely that we're going to have some volatility for the weeks and months ahead.
Experts disagree on if we are in a recession or not, but Tutt says the cusp is definitely here.
The fact that we're debating it means we're probably pretty close to it.
And one last piece of advice from experts: if you need your money in the next year, well, the stock market is not the place for it. Nicole Estefan, Eyewitness News.